3, 2, 1.
Here we go! Woohoo! Hi, happy Freight Friday, live from FreightWaves TV. You guys, we're almost there. We're almost to the Christmas holiday. Did anyone see Dooner on his What the Truck? After the show, go check out What the Truck. It is lively and awesome. What is everybody drinking today? I'm drinking something really fancy, a Belgian ale. I can't even say the word. It's very fancy. So I'm being very proper today. We're talking about cargo claims. I get lots and lots of questions via email all the time. And the one question I get the most is, hey, Cassandra, I have a cargo claim and the carrier's insurer has denied the claim. Now what do I do? And I get it from both shippers and from brokers. So we're going to talk about that today. It is an intense discussion, so I won't be able to hit on everything. If you're over on YouTube, you can hit the comments and hit the live comments and see what, if we have time for questions, maybe we will. But we will dive right in. WMFC, who's that? It says Mary. Woohoo. I will tell you that on LinkedIn, while I see you guys coming back in, John is in the house. John always knows he knows like all this cargo claim stuff. He's very good at this stuff. So he's going to love this episode. Bringing up myself on because I want to call out this post I made on LinkedIn. So I said, goods delivered damaged. Carrier's insurance company denies a claim saying no coverage. What now? And hey, for those of you who have had to deal with an insurance company that denies a claim, have you ever tried to ask them why the claim is denied, or if you could have more details or a copy of the policy? If you've asked them, tell me what you think in the comments. See if you've ever gotten anything from an insurance adjuster. Ooh, this beer's like foaming. Oh, God. Mm-hmm. Okay, this post on LinkedIn started up a huge discussion. I got beer like all over my fucking face already. This show's going real great. This entire week has been like this. Chris Baker, one of my favorite comments. Chris is over at Zengistics. He said, I would want to know the commodity and how it was damaged, and then I would pray to the sky that our contingent cargo covers it. We had a lot of good comments from Brian Towers. Of course, Matt Fink was on here. Andrew Teal had something to say. Lisa Vranek. Nadia, Lisa Monk. I had a lot of really good comments. You guys should scan through these if you have a chance. But let's talk about this. Now that everybody's come in and I see people rolling in on YouTube, let's get into what to do. So I'm going to first address this from a broker's perspective, because the majority of people who watch a show are brokers with big companies, carriers with big companies, and then we have shippers as well. And I'll hit the shippers at the end if we have time. All right, first, I want you to try your hardest to mitigate the damages. So I'm going to give you an example. We have a cargo claim that comes in, and let's say it's a full shipment of nuts, almonds, cashews, hazelnuts. And people even eat hazelnuts? I don't know. Oh, fuck it. The whole thing is full of nuts, okay? There's a reason I picked nuts. And those of you who are listening, they're in insurance brokers, you know why I've picked this. So imagine you've got a full truckload shipment. This isn't LTL, because LTL, you don't deal with insurance companies. Full truckload shipment, 40,000 pounds of nuts. Imagine how expensive it is. I bet sometimes it can be up to like, what, $500,000, $1 million? Let's say this one's $350,000. Now you're really screwed and you're terrified. So what do I want you to do first? First, we're going to go through the business piece. Oh, hi, Tim Pool. I love Tim. We're going to go through the business portion of this, which is I want you to try your hardest to mitigate your damages. So the second you hear about a cargo claim like this, especially a full truckload, let's say a bunch of the nuts are all damaged. How nuts even get damaged? I don't know, but it's food, right? So like if the nuts poured out or something, and then the consignee opens up the doors and the nuts come flying out, right? And you've got to pay for a good portion of them. I want you to get the driver to take as many pictures as possible, even open up some of the boxes if you have to. Say you'll pay for them if you open them up, and take pictures, document. If the driver can't do it, I want you to hire, because it's worth it, a independent adjuster to get out there. It can be anyone to get out there and take pictures. I doubt the consignee will, but you could try really hard. So take as many pictures because that's going to be your defense, our way to chip away at the damages that are going to be asserted here, which is $350,000. So here's the other thing I want you to do. I want you to ask the customer, once you get talking about the cargo claim, if we can salvage some of these nuts that they're saying are contaminated, damaged, whatever. Somebody stomped all over them. I don't know. I'm just making this up. I want you to ask, can we salvage some of this? And then the rest of them are good, right? Try to parse up and reduce the amount of damages that we are dealing with. Hey, Eric French. And what I want you to also do is to put the customer on notice that, hey, we didn't know this was a $350,000 claim. Usually carriers, truckers have about $100,000. And there's a lot of exclusions for food, so start warning them in advance. All right, so now we get to the part where the carrier doesn't have any insurance. You get that horrible email from the adjuster. Her name could be Shannon. And she says, you know, you're out of insurance. There's no insurance, there's no coverage, or here's one goodie, there's an exclusion. We don't cover nuts. That's a real exclusion, people. And nuts are expensive. We don't cover them. So sorry, the carrier's insurance doesn't cover. So you're like, crap, you go back to the carrier. You're like, carrier, you know, you got to pay for this shit. You put the payables on hold. Make sure to put those payables on hold. Don't pay them for any of the shipments they've moved. Just put them on hold for now. You need as much money as possible. Carrier, I need you to pay for this claim. Your insurance doesn't cover. And the carrier is usually in this circumstance, has one truck and about 7 months of authority and no money. And they disappear. They don't take your calls anymore. So you're sitting there as a broker. Now what do we do? Well, this is where the hard part comes in. Obviously, I want you to first check the contract with the customer, because you might have signed a contract and it might have said you're going to have to pay for this. And if you are, you're going to have to submit it to your contingent cargo insurer. And like Chris had said from Zengistics, hopefully it covers the insurance, right? Hopefully it covers. That sucks, you guys. That really sucks, because even if it does cover, it's $350,000 on a loss run, and you're gonna have to pay higher premiums for a while. That really sucks. The other option that you can do is look into suing the carrier. Usually it's an utter waste of your time because they don't have assets. They'll shut down the business. They don't have $350,000. Come on now. And then the other thing that you could do is perhaps negotiate with your customer. So, hey, if they're a really good customer and they give you a lot of good volume and you think they will continue to do so and they're worth taking the effort, see if you can negotiate some kind of rebate. I want you to say maybe, or do whatever you want, but come up with some kind of business solution. Hey, you run this amount of revenue with us every year. We'll give you this percentage back. Maybe every shipment you give us, I give you $1,000 back or $100 back or whatever you think is best. And that we can equate up to maybe half of the cargo claim. It's tough because you shouldn't have to pay for a cargo claim. Property brokers are not insurance companies, but often we sign those contracts that say we must pay for these cargo claims, and that sucks. If you had not signed a contract, period, there's no contract, which often is the best way to be when you're a broker. You are going to argue that, hey, we are just a broker. And under law, especially the federal regs, the broker's job is to arrange for transportation, not to guarantee the safe transportation of the goods or control the goods or control the carrier. We're just a broker. So we did that. We hired a carrier. We didn't supervise the carrier. Don't say that. Oh, Jesus Christ. Hope I erase that from the record. We hired the carrier. We gave them the information, and the carrier showed up with the goods. We did what we had to do from a logistics perspective. The carrier is its own entity. Moving forward, maybe we should buy shipper's interest insurance, and that would be more helpful. I'm going to pause here for just a second to make sure nobody has any questions on YouTube, and I can never find the thing on LinkedIn. I would watch it on LinkedIn, and I'll see if I can find it. What I want to tell you is when we talk about insurance, especially shipper's insurance, That seemed to have been a very hot topic online. And I'll show you how, right? A lot of people had said that you need to, let's see, Lisa says, brokers need an insurance agent that specializes in logistics and that has designed an insurance policy, your contingent cargo, contingent audit, E&O, that meets their needs. And she makes a really good point. It's very important that you have an insurance broker that understands transportation and that can help you with this type of situation. You have to be able to call your insurance broker. That's what you are paying for. They're not lawyers, but they are knowledgeable about the different policies and what the coverage can provide. I know that someone else had said that, let's see. Oh, I love this comment, JP MacPherson. Well, talked about this one in just a minute. A lot of people said, just buy the contingent cargo insurance. That'll cover you. You will be just fine as a broker. Now, there's a couple problems with that. And we're going to use this as a learning lesson, because when you have this situation, you can see when an insurance company says that a carrier doesn't have coverage for the cargo claim, and then the carrier is really small, which most of them are, you're at the end of the road. There's not a lot you can do. You're kind of screwed. But there's a lot you can do to prevent. And let's talk about contingent cargo insurance. Because by the way, a lot of shippers these days don't even want you to have contingent, right? They want you to have primary. They want you to have first. Like the contingent means you're waiting for the motor carrier's insurance to cover. And if it doesn't, then your insurance as a broker picks up. But some shippers don't want to go through all that. They want to make you have first liability. So don't even wait around for the carrier. Broker, your insurance is going to pay. It's expensive. Ryan Penfold's with us. It seems like he was all over this post. He's very knowledgeable when it comes to insurance as well, it looks like. So I want to talk about contingent cargo, because you need to be careful when you procure contingent cargo for your company as a logistics company. Ask your insurance broker for an entire list of all the exclusions, because many of them will have nuts on there as an exclusion. They'll have all sorts of different exclusions. One really good insurer is TT Club. I like them as an insurer, but they're really expensive. Travelers is also a really good insurance company. Progressive's getting better. Like maybe 6 years ago, they fucking sucked, but now they're getting better. And we're missing one that's pretty decent. Lloyd's, I mean, all of this is in my opinion. Lloyd's of London, just plan on never using it. Eric French says, what are your thoughts regarding customers using the word invoice value in a contract when identifying declare value of commodity? Normally it's a replacement value related to insurance. Wow, Eric knows his stuff. That's a really good point. So when you have a cargo claim as a broker and your customer, you're going to have to tell them, hey, you got a cargo claim. You've got to send me pictures, send me the bill of lading if you don't already have it. Send me how much the goods cost. So what some shippers will do is they'll try to hand you the invoice of what they would have sold those nuts for at retail value, which means I sold this to Walmart or to Costco for $3 million. And you're like, no. The federal law says commercial invoice. And that's what Eric French is getting at here, which is how much did you buy the goods for? Not how much you were going to sell it for. We're not going to make a profit off this, folks. I know you want to, but nobody in our industry will be able to stay in business if we start allowing shippers to make profit off this shit. So you will ask for a commercial invoice. You'll have to fight them on that. It is very important, if you can remember, when you sign contracts, you're looking for commercial invoice in the cargo claims section, not retail. If you see that word retail, even do a control find and look for retail. Cross it out. Dig it into the paper. All right. So here's the other thing I want to talk about besides contingent cargo is, in general, as a broker, when you have cargo insurance, when you have any insurance, you really don't want to make a claim ever. You're paying for that insurance to protect your business as a last line of defense, to keep you from going out of business and not to keep you from impacting your cash flow. It's to keep you going out of business, and it's to check that box for your customers, right? So you never want to use it, because once you do, Next 5 years, you'll be paying premiums out the ass. And it sucks. And then let's say you want a better insurance. Let's say right now you have a contingent, but you really want like a all risk, beautiful TT club, primary response, beautiful policy, because then your customers will love it and they're asking for it. The bigger customers want more insurance from you. If you don't have any claims on your history, your loss run, you'll pay less in premiums. And you'll be able to get that nice, cush, beautiful policy. Why do you want that? Because customers want it, the big customers. They always want it unilaterally. Eric will tell you, and Tim Pool will tell you, and John will tell you that they will, and so will Chris, that big companies want you to have more expensive insurance. So let's talk about another insurance topic that came up in this list. And I don't sell insurance, right? I'm just an attorney, but I work closely with insurance coverage and I've had to litigate it before. So another one that came up along with contingent cargo was shipper's interest. This is one of my favorite insurance policies. When you ask your insurance broker for shipper's interest insurance, and I'll tell you what that is in just a minute, and your insurance broker doesn't know what that is, you're probably not dealing with a specialized transportation insurance broker. I might piss a lot of people off by saying this, but when have I not said things? I mean, I always piss people off. It's the beginning of the end. So here's the thing. Shipper's interest, very cool product. This is what a lot of people do to cover themselves from shippers who don't tell you the value of the product. Sometimes they don't even tell you the goods that are really on that cargo, because on that full truckload shipment, because they don't want to pay for a higher rate. Because if you have an expensive shipment, you have to pay for a higher rate, right? Because it's more risk for the broker and for the carrier. Or the value is above $100,000. And of course, we don't want that to hit our contingent cargo. We don't want to have anything to do with that. So shipper's interest is a transactional insurance you can buy for each shipment. So some people set it up where, they tell a shipper, hey, every time you have a shipment more than $100,000, let us know. And for $10 more, we will add on the shipper's interest. Sometimes you build it into your own rate. Or another option is, besides shipper's interest, which is a really great product. You can integrate into your TMS, by the way. There's lots of options with it. You get yourself a really good insurance broker and they'll know how to set you up with it. You got to build it into the rates. Another option is if you do get a dedicated lane, like let's say Nike, expensive clothing, often an exclusion in insurance policies, by the way. Let's say you get a dedicated lanes from them and it's worth the insurance it's worth the ROI and your profit to get an insurance policy. You can go to your insurance broker and you can buy a policy just for Nike, and it will cover you and it won't go into your loss run in the same manner it would if you made a claim on your contingent policy. Shipper's interest, we call the other policy, like the Nike one, we call it like a blanket policy. But your insurance broker will know what it is. You can shop around for those. You don't have to use the current insurance broker you're using. You can go to other ones as well. And those will cover you. So next time these types of things happen, you'll have a little insurance to cover you. For shippers, I told you toward the end of this show, I would start to talk more about shippers and a little bit more about brokers as well. So this is a great opportunity for my shippers out there. When you have a situation where a broker or a carrier has come back to you and said, the goods are damaged and we can't pay your cargo claim, or we won't pay your cargo claim. Here is what you have for options. Very similar to what a broker has against a carrier, right? I hate giving this because I'm talking out of both sides of my mouth. But hold the payables, and which everyone hates, called offsetting. It pisses everybody off, but I'm just saying the truth, you guys. So don't get mad at me when I say that. And then you're going to try and negotiate with the broker and with the carrier, if possible. Find out who the carrier is, get the carrier's information, because you now have a little bit of privity going on here. You might not have privity of contract, but you have a cargo claim with under federal law. You will have a direct cause of action against the carrier. So work with both parties, if possible. and their insurance companies. Make sure that you are speaking to their insurance brokers as well, because you might be able to get folks to negotiate. You might be able to work. You should also have insurance that will cover this as well. Moving forward, this is the downside of picking carriers, of picking brokers without thoroughly vetting their insurance and without thoroughly making sure you understand what their procedures are with carrier selection and insurance selection. And no one really wants to hear this because this is a lot of work. And I think Tim Pool will know what I'm talking about. It's a lot of work to make sure that as a broker, you are vetting carriers so you don't get in this situation. And sometimes you can't avoid it. And then it's a lot of work as a shipper to make sure that you're selecting brokers and carriers who can respond and have coverage. But here's a tip for shippers. I know you don't want to tell anyone what's in that full truckload shipment, but the more communication you have, the more you can avoid these types of situations like you do with these almonds or Nike clothing or anything else that's expensive. Because if you use a very cheap new broker or new carrier and you don't know a lot about them, but you're so happy because they signed their contract without reading it, the downside of that is if anything goes wrong, you're probably going to be fucked. You got to have good carriers, good shippers, and put effort into vetting them to avoid these types of situations. So the beginning of this show, I talked about carrier doesn't have insurance. Now what? The options are limited. You can tell whether you're a broker or whether you're a shipper. Like, you don't have a lot of options because carrier doesn't have really any money. So you can't, it's like getting, what is it? Getting blood from a rock or something like that. It's the same thing, but you understand what I'm saying. And then the other part is that, let's see, Tim Pool says, amen. Do not gain capacity by lowering your standards. Oh. Tim takes it home. So we started out the show talking about what do we do if the carrier doesn't have insurance. And you can see there's not a lot of options. You're kind of screwed. So the best way to pivot is to go into how to prevent these things from happening. So another common way that you can prevent, let's say you're a shipper or you're a broker and you're hiring a carrier and you know you have an expensive shipment and or it's food, right? I know this is really annoying, you guys, but try to hire a carrier who's been in business, consistent, active authority for longer than a year. Usually within a year, that's how long it takes to weed out those carriers who they're not so good. And try to vet their insurance. It's laborious. So just because on the DOT website or on SaferWatch or whatever the fuck you're using, it says, oh, they have insurance, and they sent you an insurance certificate, and you're like, oh, I'm good. I got the certificate. That doesn't mean they have insurance. You can falsify those certificates. The certificates just say that the insurance just sits there, but does it cover? Does it cover food? Does it cover nuts? Does it cover Nike clothing? Probably not. You need to actually call the insurance broker listed on the certificate and ask for a list of exclusions and any other limitations that you need. One major limitation I want you to remember forever, because this is the big limitation that everyone gets hit with. It's called a scheduled VIN policy. And many of you out there have heard me complain about scheduled VIN policies over and over and over again. What does it mean? I'm going to wrap up by warning you guys about these policies. You're going to see a VIN number on the insurance certificate. If the truck carrying your goods does not have that VIN number, there's no insurance. And they could lie to you if you ask them for their VIN number, by the way. The best bet is to not use that carrier for food or commonly excluded goods or anything that's like expensive or anything like that, okay? Schedule VIN, you see a VIN number on the insurance certificate, don't use that carrier for goods that you truly care about or shipments that you're going to be liable for. All right, so I have slapped everyone in the industry with a whole bunch of knowledge. You might have to watch this like 3 or 4 times to get all of this information. But I do that as my Christmas gift to you guys because this is the common problem in the industry that everyone's trying to figure out how to deal with. And the best thing is prevent. There's not a lot you can do when it happens. For those of you who missed Kevin Hill's episode this week, that's what this is piggybacking on. He talks about how to have that difficult conversation with the customer, which is really hard. How do you tell them, sorry, $350,000, I can't pay it, you're out of luck? How do you say that? Go to Kevin Hill's, put that coffee down, and watch it, and make sure to catch Dooner's episode where he's like, I swear I saw a tractor trailer truck run over a Christmas tree in his episode. He's so wild. So make sure to catch up with all that. Thank you for joining me. Have a great new year. I will see you guys after the new year. We're going to have great guests. We're going to have more conversations. If you want to hear more substantive conversations like this one, email me or message me and let me know. And that's it. Happy holiday. And make sure that you drink a lot of beer. You deserve it. This year was a bitch. Oh my God. You deserve it.
Hey, if you're a full truckload freight broker, this video is for you. I'm Sean from Ty Software, and I want to show you how our customers have